several factors have been brought forward to explain the reasons why we're seeing cement prices much higher. But from your perspective as an operator, just tell us more. What exactly is going on?
Well, from my perspective, and which I would say is the reality on ground, the primary or the sole reason for the cement price to be going up today is the internal transportation cost. If you look at cement as a product internationally, invariably the cement importers pay more for freight than the cost of the cost of the cement. So from any country, when you want to even import cement into Nigeria or any other part of the world, people end up paying more for the freight per ton of cement than for the cost of cement. Cement is comparatively a cheaper product, but it's more expensive to transport. So normally when we manufacture cement within a country, apart from the added value and the benefit which the country gets by way of employment and other benefits, the primary benefit the consumer gets is that he's going to save a massive cost on the freight. But what happens in Nigeria today is the cost of internal transportation has gone up tremendously in the last 3 or 4 months. The primary reason driving this transportation cost is the diesel price. There has been a period of acute scarcity of diesel for the past 3 to 4 months, and it has been gradually increasing. And the price of diesel has gone up by almost 50% today. We ourselves are major consumers of diesel, not only for our power plants, for our mining equipments, but for a large fleet of trucks we are having. So the transportation cost is what is driving the cement prices up.
What about other factors that some analysts have mentioned, particularly import duties for the imported cement, of course, up from 15 to 35%. There are also issues relating to a reduction in quotas for imports, driving a scarcity somewhat from the import side. And then, of course, there's speculative demand. To what extent are these factors contributing to the increase in your view?
Yes. At the end of the day, even when you bring in the imported cement, whether you bring it to Port Harcourt or Lagos, it has to be distributed. And you take my own price of cement. My ex-factory price of cement from Benue is 1,250, which has been there for several months and unchanged. My ex-factory price from Obajana is 1,330, and it is remained unchanged. And I am also subsidizing the transport because I have a fleet of 1,500 trucks. I take the cement to Port Harcourt, and from my depot today, people can buy at 1,350. So if people still bring in cement, at the end of the day, that will be the same price at Port Harcourt. I take the cement all the way to Lagos, and it is 1,450 available right now there in my depot in Lagos. But if you import the cement, that will be the same price. But why the price of the cement is going up all over the country is at the end of the day, these goods have to be transported to various pockets of the country. Nigeria is quite a large country, and this transportation cost is driving it up.
But what's the capacity of the market to absorb these increases? I've heard, for instance, that in some areas, prices are up well over 40% in the last 6 months.
Well, in the last 6 months, it's not possible because just a few months back, 4 or 5 months back, we ourselves were having huge quantity of cement all over the country in our depots. Anybody can just go through our records. You can see the stocks we were holding in our depots. You can see how many 1,000 tons of cement I had to declare as caked cement because during this rainy season, those goods were lying in the depots, unlifted, and it all got spoiled. You know, cement is a highly hygroscopic commodity and it can get spoiled. But today, now with the rains have gone and the season has picked up, I also do not have much of stocks in various depots. I do have stocks, but not much, and they're fast moving. And again, talking about the imported cement, what is the percentage it plays in the total market? The percentage of imported cement, what it plays is quite small. So it is so small that that cost of either the increase in duties or the reduction in quotas is not possible for it to have any major or significant impact in the price of cement today.
Okay, let's talk about Dangote Cement now. Obviously, you are the market leaders with market share of well over 60%. And obviously, the company was listed in November last year. Now, many analysts were divided on the valuation of that company as to if it was expensive or if your projections were very aggressive. Obviously, with this development with the diesel price, as you've mentioned, that's going to impact on your earnings. What would you say to investors who invested in Dangote Cement right now? Should they be concerned?
Well, today, we ourselves have built up massive storage capacity for diesel. I have 70 million liter storage capacity in Boko. I have 60 million liter storage capacity in Obajana. I have a 30 million liter storage capacity in Lagos. So obviously with this kind of shortcomings, it's a short-term issue. We have facility to import the diesel. We have facility to discharge. We have our own jetty with direct discharge facility and storage in Apapa. So when we can store up to $90 million worth of inventory in terms of LPF and diesel. So that's exactly what we are looking at right now, that we will bring in our own diesel and then we will be able to manage the operations. Today, yes, we are subsidizing the operations because we want to maintain the price of cement in the market. It's increasing the price of cement today will not be unsustainable in the long term. So if for a short-term benefit, if we try to increase the price of cement because the prices of diesel has gone up, will not be good for us in the long term. So we are subsidizing it today, but we will bring in imported diesel and we'll be able to manage the operations in a more efficient way and probably in a more profitable manner in the days to come.
But what are your expectations for the cement price going forward into the medium term? Obviously, you mentioned that this is hopefully short-term issues, but what are your expectations going forward, given the fact that you are going to up your capacity to well over 20 million tons per annum sometime next year? What are your expectations? Should we expect a significant crash in cement prices?
Cement prices has to come down. In fact, our full capacity of what we are producing, what we are going to manufacture, we have to look at to see whether we will be able to fully offload into the market or we will have to also look into the export market. We are already designing an export terminal, one in Tinkan Island with the jetty where we have. We are also designing an export terminal in Apapa. So we will have facilities, outlets for export. We already have a cement terminal in Ghana, in Takoradi, in Tema. We are putting up a new terminal in Takoradi. We are putting up terminals in Liberia, in Sierra Leone, Ivory Coast. So if the cement market in Nigeria is unable to absorb these goods, we would have an outlet to export. But at the same time, we are also looking at the not only the immediate future, but the long term to come. With a 10 to 12% growth rate in cement, even this 6 million ton capacity coming up in Ibeshe will be able to help you tide over for about 2-3 years. After 3 years, if there is no added capacity, 3 years from now, 2015, you will have a shortage in cement. So last week, we have signed up an agreement with our EPC contractor to put up 3 more cement lines in Nigeria, 2 more near Ibeshe, 1 more near Obajana. So we are not stopping with this because we are looking at what's going to happen in the future.